Ladies and gentlemen, good day, and welcome to the Q4 and FY25 earnings conference call of Shalby Ltd, hosted by Elara Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is recorded. I now hand the conference over to Mr. Kashish from Elara Securities. Thank you, and over to you, sir.
Oh, thank you, Pooja. Good afternoon, everyone. We welcome all the participants to the Shalby Ltd Q4 FY25 earnings conference call hosted by Elara Securities. Today we have with us senior management representatives from Shalby. We will start with the performance highlights from Mr. Amit Pathak, CFO, and Mr. Deepak Anand, Global Chief Business Officer. After that, we'll open the line for question and answer for all the participants. I will now hand over the call to Mr. Jigar Todi for important disclaimers regarding any forward-looking statements that may be made in today's call. Over to you, Mr. Jigar.
Thanks, Kashish. Good afternoon, everyone. Our investors presentation is uploaded on the stock exchange website and our company website, shalby.org. We do hope you have already had the opportunity to go through the presentation. Please note that some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainties. Kindly refer to the slide number 2 of the investor presentation for a detailed disclaimer. Now, I would like to hand over the call to CFO Mr. Amit Pathak for his opening remarks. Thank you, and over to you, sir.
Yeah, thank you, Jigar. Good afternoon. I'm pleased to welcome you all to the Shalby's Q4 FY 2025 earnings call. Now I'll walk you through the financial performance of the company for the fourth quarter of FY25. On the consolidated basis, we have delivered the 270 crores of the top line versus 249 crores of the top line into the Q4 of the last year, and we have been grew by around 8.4%. EBITDA on the Q4 is 26.2 crores versus 43.9 into the same quarter of the last year, with a margin of 9.7% in the current quarter versus 17.6 in the Q4 of the last year, and there is a dip of around 40% of YOY business. PBT, we are kind of almost flat with around 0.7 crores negative versus 21 crores into the Q4 of the last year. Now, revenue for this FY25 on the annualized basis is 1,115 crores versus 953 crores into the last year, and we have been grew by around 16.9% of YOY basis. This is the increase into the revenue is mainly coming from the Sanar, because last year we have just consolidated for 2 months plus for Sanar, and this year the entire year has been consolidated. So 80 crores is coming from the Sanar hospital, 35 crores rise is coming from the implant, and the another 45 crores is coming from the standalone Shalby's operations. On the consolidated basis, we continue to maintain the strong balance sheet with a low gearing ratio of 0.28 on the net debt of around 279 crores. Now I will run you through the standalone performance of the hospital. Standalone revenue of 214 crores in Q4 of FY25 versus 210 crores into the Q4 of the last year, and we have improved by around 1.7%. EBITDA is 38 crores into the current quarter versus 42.6 crores into the Q4 of the last year, with a margin of 17.7% in the current quarter versus 20.2% into the last quarter of the last financial year. And there is a slippage of around 11% on YOY basis in terms of the EBITDA margin. The down in EBITDA is mainly because of our strategical movement towards the investment into the doctor, which if you can see on the YOY basis, there is an increase of around 2% into the doctor cost, and due to the change into the peer mix, there is around 1% increase into the cost. PBT is around 25.7 crores in the current quarter versus 32.5 into the Q4 of the last year, with a margin of 12% in the current quarter versus 15.4% in the Q4 of the last financial year. Now, on the standalone basis, again, we continue to maintain the positive cash positions. The net debt is 0, and we have the positive cash balance of 23 crores close to around. On the operating leverage, what we are kicking off with the satellite model, our standalone ROC is around 14% in the quarter 4 of this financial year on an annualized basis. The ARPOB allows continue to show the improvement with 41,585 and 3.66 respectively, compared to 39,101 and 3.75 in the same period of the previous year. ARPOB on YOY basis has been grown by around 6.4%. The number of occupied beds in the current quarter is 633 versus 637 in the quarter 4 of the last year, and it's marginally decreased by 0.6% on the YOY basis, with the occupancy rate of around 45% in this current quarter. The payer mix continued to showcase a similar kind of structure with around 36% for the self, 41% for the TPA, and 23% for the government business. The revenue of the Shalby Sanar for the current quarter is around 23 crores versus 24 crores into the last quarter, with a marginal decrease of around 5% on quarter-on-quarter basis. The ARPOB continue to be the robust here, and we have delivered the ARPOB of 84,647 with the LOS of 3.88 respectively in the quarter 4 of the current financial year. We are currently still operating at around 23% of the occupancy level, and it will gradually increase as we mentioned into the current financial year. We are going to see the leap into the Shalby Sanar into the coming quarters. The current quarter, if we are talking about, 60% of the revenue is from the international business and 40% of the revenue of the Sanar is coming from the domestic business. On the overall group basis into the hospital, the total business for the international business is close to around 15.3 crores, which includes 3 crores from the Shalby and around close to 12.5 crores is from the Shalby Sanar hospital. Now, if you are talking in terms of our clinical excellence, we have devised a lot of clinical surgeries during the quarter into our many hospitals, and we are proud to say that we have completed the 16 transplants, 10 into the kidneys, 6 into the liver during the current quarter. Further, on terms of our franchisee business, we have closed our relationship with our Rathi franchisee in the month of March. We have closed down the relationship with them. And but overall basis, if we are seeing our Koso business is close to 2.19 crores, which has been grew by around 26% on the YOY basis, and Posam is around 0.76 crores, which has been down by close to 5% due to the shutdown of our Udaipur location into the last financial year. Our home care business has served around 30,000 plus patients versus 29,645. There is a marginal increase of 1.3% compared to the similar period of the last financial year. The home care business also shown the growth of around 5% on annualized basis, which is around 15.3 compared to 14.6 into the last year. As part of our social commitment, we continue to spread awareness about the importance of the health and well-being through various social media platforms and created 75 plus healthcare videos. We also conducted more than 480 plus healthcare camps and 115 plus healthcare talks across all our units during the last quarter as a part of various community outreach programs. As a Shalby, we take the pride to nurturing young talent through our academy vertical with 22,000 plus students which has been registered on the various healthcare programs during the current financial year. And we would also like to inform the Shalby Academy has successfully completed 200 plus enrollment for the team Indore and 50 plus enrollment for the team Jabalpur in paramedics stream. The total paramedics enrollment for the current year is 385 plus. The total 110 students are certified through EHA and schools Ahmedabad, and we have also trained 30 plus Pharma D for the 1 month student at our various under the guidance of pharmacist, general physician, pharmacologist with the collaboration of the Sada School of the Pharmacy, Gandhinagar. Now I will hand over the call to Mr. Deepak Anand, who will share his insight about our implant business. Thank you, Deepak.
Thank you, Amit. Good day, everybody, and welcome to you to our Q4 and full year financial year 25 earnings call. Thank you for taking the time to join us. Today I'll walk you through our quarterly performance, share highlights from the full year, and update you on our strategy for growth and value creation. Shalby Medtech, formerly known as Mars Medical Devices Limited, is a growing force in the orthopedic implant space through our subsidiaries as Shalby Advanced Technologies in the United States and Shalby Global Technologies in Singapore. We are steadily building a global supply and innovation backbone. Our vision is clear: restoring mobility, improving lives. We deliver surgeon-friendly implant system tailored to regional clinical needs while maintaining world-class standards. Our key differentiators include nimble, surgeon-responsive R&D, high reliability and ethical operations, personalized support with deep orthopedic experience. Let me now walk you through our financial highlights for the quarter. Shalby Medtech consolidated revenue for Q4 financial year 25 stood at 29 crores versus 12 crores in Q4 financial year 24, reflecting to a year-on-year growth of 138%, driven by robust domestic volumes as well as improved channel partner engagement. Total of 12,727 implant components sold in Q4 financial year 25 vis-a-vis 8,485 implant components sold in Q4 financial year 24, which is a growth of 50%. From an annual performance standpoint, Shalby Medtech consolidated revenue for financial year 25 stood at 93 crores versus 55 crores in financial year 24, reflecting a year-on-year growth of 67.2%, driven by robust domestic volumes and improved channel partner engagement. Total 41,960 implant components sold in financial year 25 vis-a-vis 30,000 implant components sold in financial year 24, which is a year-on-year growth of 40%. We achieved operational efficiency while scaling up production capacity and regional coverage. Our gross margins improved on the back of supply chain optimization and value-engineered implants. What I will also take an opportunity right now is to walk you through a roadmap for the upcoming year 25-26 and share our strategic outlook aligned with our vision of restoring mobility and improving lives. Our commitment remains steadfast to exceed the expectations of both our customers and employees by delivering superior patient outcomes through the highest quality orthopedic products and services. We continue to build on our core values of teamwork, reliability, and integrity, ensuring customer centricity, nimbleness, and transparency in all our actions. Our strategic priorities for 25-26 revolves around the same 4 pillars as last year, but with slight change. Where we were calling it new product development, we call that product and innovation. We'll focus on local partnerships across different countries to expand our footprint. We plan the global launch of 2 new products this year. We are advancing robotic partnership with Curexo and Monogram. Curexo being a South Korean, Monogram being an American company which is listed there to integrate cutting-edge technology into our surgical solutions. Project teams will initiate new product development projects to build a robust innovation pipeline for future launches. We will also strengthen key existing product brands that we have to gain market share. Our second pillar, which we were calling sales, we will want to change that and call that customer segment focus. Our sales efforts will concentrate on key markets, which is US, India, Indonesia, and Japan. We aim to increase market share in these regions by leveraging existing resources and deepening customer relationships. Brand awareness will be enhanced through partnerships with key opinion leaders, clinical agreements, training programs, and targeted marketing engagements. We will also launch operations in 4 to 5 new countries in 25-26 to diversify our market presence. Cost of goods sold reduction, that's our third pillar. The critical focus will be on cost efficiencies, targeting a reduction in costs by 30%. We'll identify and execute manufacturing efficiencies and optimize warehouse management to improve margins. And the last pillar being supply chain excellence, which we had called earlier as capacity, but we want to rename it as supply chain excellence, in which we will establish multiple vendors to mitigate tariff impacts and improve procurement and freight efficiencies, aiming to reduce costs by 15 to 20%. Distribution efficiencies will be tailored to each market to ensure timely and cost-effective delivery. We have improved our order to cash and asset utilization and started to address our high inventory. Further inventory improvements will be an area of continued focus in 2025 to further enhance working capital and ROC. The last was fifth new entrant into the pillar is our organization and talent development, which we have identified as an important strategic pillar for the year to come. Hiring of key leadership talent across the organization is priority in 25-26. Recruitment, retention, and continuous training of sales and corporate teams remain a priority. We will enhance employee engagement through clear career development pathways, rewards, recognition, and regular communication. Our partner relationships will be strengthened to ensure alignment with our strategic goals. In conclusion, our roadmap is designed to drive sustainable growth, operational efficiency, and innovation leadership in orthopedic market. We are confident that our strategic initiatives, combined with favorable market dynamics and technology advancements, will position us strongly for the future. Thank you for your continued support and trust. We look forward to a successful year ahead. Now I give it back to Amit for further.
Yeah. Thank you, Deepak. So now we can open the forum for the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of R. Vidya Shankar, an individual investor. Please go ahead.
Good afternoon, gentlemen, and thank you very much for giving me this opportunity. I have joined this conference call after a long period actually. There are concerns on the falling EBITDA and the falling margins. Plus, the main concern is that you had announced the board meeting with an agenda of dividend and you have skipped it. So we would like to understand why so. Obviously, the results are reflecting it, but and there was a pre-planned agenda and we got skipped. Secondly, on your website and the latest shareholding pattern format, the details of the people who are owning more than 2 lakhs, that names are not appearing. Is it possible that you can publish a complete list of shareholders on an annual basis? So for March 25, can we have that? Thank you so much.
Thank you for the questions. Now, in terms of the EBITDA, this is a very strategic call where you are going to see a lot of upward in terms of the hospital business. We have invested a lot into the doctors, into the quarter 3, quarter 4. So that is the reason there is around 2% jump in terms of the doctor cost. And apart from that, the 1% hit in terms of the standalone is on account of the change of the peer mix, what we have during the year in terms of the change of mix into the different specialty. On the consolidated basis, the dip is mainly because on the annual basis, if I am talking, mainly because, as I mentioned, this year we have the entire consolidation of the Sanar, where we have last year we have 2 months. So we have been hit by around 7 crores into the absolute number for Sanar in terms of the losses. And where in terms of the implant, if we are talking about, the business is nurturing and we are investing a lot into the business where we have to do some kind of investment to grow the business into the coming years. So that is the reason you can see some decrease in terms of the EBITDA into the current year, and you will see the upward movement into the coming years, which will come from FY26 onwards. Now, in terms of when you're talking in terms of the shareholders, a name to be disclosed, I think you can connect to our company secretary. There is a regulatory requirement which we have to comply in line with the Companies Act. So you can connect with him and he can share with you details as a right of the shareholder. The third and other thing where you are talking in terms of the dividend, so you can understand as a process of agenda, definitely we have to take forward the agenda and the board is to decide whether we are going to declare the dividend, what dividend we have to give. And looking after the consolidation and lot of investment where we are looking forward for unlocking the value of the company with multiple investment, what we have done in current year and going to do into the next year. We just want to reserve the cash for some time, and once the company is going to perform well into the coming year, we will definitely come ahead with the appreciation in terms of the dividend for the shareholders.
Sir, thank you very much. With regards to the shareholder thing, I had written to Mr. Tushar Jadhav. I think he is your company secretary, if I am not mistaken.
Okay, I will take up with him. I will just tell him to get connected with you and resolve your query.
Yes, and I look forward to a robust performance in the coming year because investments have been made, so they should be resulting in quite a decent upward movement and we will be, investors will get rewarded as equal stakeholders. Thank you very much, sir, and all the best for the future. Let's have a healthy future. Thank you.
Thank you.
Thank you. Participants who wish to ask questions may press star and 1. The next question is from the line of Raja Kumar Vidyanathan from RK Investments. Please go ahead.
Yeah, good afternoon. Can you hear me?
Yes, we can.
Yeah. Sir, if I just look at the segmental information, and if I kind of look at your 3 levers, that is your standalone health, hospital business, then your Sanar, and then your manufacturing of implants, right? So if I look at these 3 segments, and if I see your Q4 performance, all your 3 kind of verticals have not performed well. And, unfortunately, see, even in the previous quarter call, you mentioned that the hospital segment is down due to some one-off cost of 6 to 8 crores. And, that will kind of get, removed in the upcoming quarter. But in Q4, you've done worse than Q3. So, I would be happy if you are kind of more forthcoming in terms of, I think you just mentioned that you added some doctors, the cost has gone up and all that. So, it's, the surprises is, not kind of good for the investors community. If you want to attract institutional interest, there should be some kind of a predictability in what you were saying. I would a kind of request, if you see a bad quarter, I'm sure, you will have a good visibility in terms of at least 2 to 3 quarters. So, it would be helpful if you could educate the investors upfront rather than throwing the bad results quarter after quarter. That's my first request, sir.
Sure. So, thank you for the question. If you can see the segment on the consolidated basis, where the PBT has come down, that is mainly into the implant. And you can understand implant, we have a long-term growth strategy, and this is the year, and the coming year we are doing a lot of investment. So you can see last quarter we have 8 crores of the loss into the implant versus 16 crores into this quarter, which has been majorly impacted this business. Whereas in the healthcare, if you can see the overall basis, 4 crore plus kind of losses has been there. In that, around 2.5 crores is due to Sanar, because Sanar, it was the first year of operation. We continue to have some kind of losses on the EBITDA level, where just to correct my answer, this is on the PBT level. So apart from that, also we have the losses thereafter. So you have seen these losses close to 3 crores kind of thing. On the hospital front, some losses, I will not say the losses, because once the doctor is getting onboarded, it took around 3 to 6 months of time to deliver on the pace. And again, I don't want to commit anything in terms of the forward-looking point of view, but definitely FY26 looks promising on the hospital front.
So I have to add to that, if you look at, the Sanar hospital, which has, been, you divided the businesses into 3 buckets. If you look at the Sanar hospital, the acquisition, that has done decently well for us in terms of, the growth, in terms of the numbers. So if you look at the IP count, we've grown by 20%. If you look at the daycare count, it has gone up by 40%. If you look at the OP count, it has gone up by 25%. And in any hospital, you see a gradual increase in growth, and these are high growth numbers. In terms of profitability, I agree with you that, we have been negative 7 crores on EBITDA in this year, but the revenue has definitely gone up. And since it's just going to be the second year of operations, and, we are pretty confident that we are not even going to break even, but, be positive EBITDA in the Sanar hospital in this year. In terms of the PAT levels, yes, the depreciation is high at that hospital, so it will take probably a year or 2 years, to kind of be PAT accretive over there. But, we'll be EBITDA positive from this year onwards in the Sanar hospital business. In the standalone hospital business, as Amit said, I agree with you, that the performance could have been better in the standalone hospital. But the EBITDA, we have invested significantly in new talent and buying doctor practices, and that has hit the Q4 of this year for us particularly. So all of that will play out in the coming quarters. We're not going to give projections or guidance, but it will play out in the coming quarters. The implant business has shown significant growth across the US business, India business, as well as what we have done in Indonesia. And although the P&L numbers are not showing it right now because of the scale at which we are operating, we are confident that in the next 12 months to 18 months, we'll be seeing a different picture for the implant business as well.
Yeah. Thank you so much, sir, for responding to my question. Sir, my concern is, if you could at least give one slide where you can put these three buckets and give a range, that will kind of educate the investor what to expect from Shalby, because otherwise we are just, shooting in the dark, from an investor standpoint. So because your standalone business used to do very well, even that has started deteriorating, and that is really a concern. That is still not addressed. So, that is one point. And also, there are these slides, if you could please maintain consistency, because last time you gave maturity-wise hospital performance, that slide is missing. In fact, I said in the last call it is a good slide. So that slide is missing. And, even on the Shalby Advanced Technology, last time you gave revenue and EBITDA details, now only revenue numbers are given. The slides are going up and back and forth. So if you could just maintain the slides, it gives a continuity. Otherwise, if you keep on changing the slides, it doesn't kind of convey, something good to the investors. So that's my humble request.
No, your point well taken, and definitely maturity-wise and other things definitely we will do. And as Shalby has mentioned that implant, a lot of things is happening. So we want to update the investor with the movement, the positive movement and other movement which is happening in terms of the implant business. So we are going to see a lot of addition of the slides also into the coming quarter into the investor presentation, because we have to keep updating the investors for the newer thing which is happening into the organization. But point well taken. We'll try to keep the familiarization as much as possible.
Yeah, sir, if you could give some range, so the three buckets that we spoke about, where do you see, all these three buckets firing in terms of the next year, or if you could give a medium-term view, 2 years, that would be really helpful as an investor.
See, what we can only tell you is that the hospital business, has been growing, in double digits for the last 5 to 7 years. And you can expect that kind of growth going forward because we have unutilized capacity. Sanar business is, a newer business. So, that business will grow at higher double digits, and you've seen that trend. I just spelled out some of the numbers, how we have grown in the last year. So it has the potential to grow at similar levels or higher, going forward. At least until we exhaust capacity. And for the implant business, we've kind of grown 4 times in Indonesia from the last year. We have grown almost 35 to 40% in US. We've grown almost 2.5 times compared to last year in India. So, as the base is small right now, it is in a high growth trajectory. So you can expect a much higher growth levels in the implant business. But beyond that, it's very difficult for us to give you projections.
Okay. So you were at least FY25-26, will it be better than the 25 numbers, what you have reported on an overall basis, both for the healthcare and the manufacturing and the implants put together?
So definitely, look, we totally understand on the standalone basis, on YOY basis, we grow by around 5 to 6%. But as you mentioned, historically we have grown by around into the double digits kind of thing. And that is the way we are expecting into our hospital business. We already mentioned regarding the implant because it is just into the initial phase. The base is pretty low, but we have grown really rapidly fast, and we expect the growth to continue into the similar fashion. So we're going to see the good growth in terms of the top line in the current financial year compared to the last year.
Okay. Thank you so much, sir. So last one question on the tax rate. So you last call, you mentioned that you will be moving to the new tax regime in FY 25-26. So is that holds now, or the MAT will be fully utilized as of March, or you'll be still remaining in the old regime?
So it's almost utilized. So we are going to move into the new bucket from this financial year.
So it will be from Q1?
Pardon?
So it will be from the next Q1 onwards, right?
Yes.
Okay. Thank you so much, sir. And I'm sorry if I sounded a bit negative. I just wanted to be, as call spade a spade, So the idea is not to demotivate the team,
I appreciate it.
Yeah. Thank you so much, sir. All the very best for the future.
Thank you. Ladies and gentlemen, in order to ask a question, you may press star 1. The next question is from the line of Kashish from Elara Capital. Please go ahead.
Hi, thank you. Sir, first question just on tax rate. So, our FY26 tax rate will be around 25%?
Sorry, can you repeat?
Our FY26 tax rate will be somewhere around 25%?
Correct.
Understood. Sir, so as you have said, in the hospital business, there has been quite a few additions. So this addition, the addition of talent, is it in the maybe in the higher management side, or how it is And have you seen any attrition? That's why you have done addition, or can you just spend some time on it, why it is done, and what was the whole scenario behind it?
The addition are at few big units. Say at Indore, we have hired your big GI team who is well known at Indore and at Asia level also. So that is how there are 8 doctors who are hired in GI team, and we have started that vertical of GI and hepatobiliary disease as well as liver transplant department. So it is all high-end procedures and super specialty work. That is how we are going and hiring, and it is a strategic decision to go in with high-end procedures and high-end surgeries. So same way is with Surat, same way is at other hospitals. So if you see in this quarter, say Jan, Feb, March, we have hired 40 doctors at different hospitals, which are into super specialty work development.
Understood. So there was no attrition as such, if I'm right.
No, there is no attrition. As we mentioned, we have started the new segment, the GI segment and liver segment into Indore. So there is no attrition.
Understood.
So at small hospitals, say Vapi, Jabalpur, there are attrition. At the small places, we replace with regular teams with an experience of 3 years and basics, general surgery, ENT, ophthalmology. But say if at Ahmedabad, at Indore, at Sanar, we are going with very high-end doctors. So we have already practiced and footfall of say 40 to 50 patients per day in OPD as well as few surgeries per month. So to bring in practice, we are buying out practice, sir, in short, at big hospitals, at metro cities.
Understood. Thank you so much. So next question is towards Naresh sir. It is more for implant business. I heard in his commentary that we are planning to launch 2 new products in this financial year, if I'm not wrong. So what can be the opportunity size of the 2 new products which we are planning to launch? No, I know it is very difficult to answer, but if you can just throw some light at how it is going to be, how we are planning to progress through it, it will be very helpful for us.
So the 2 new products approximately at the annual level should contribute anywhere between 40 to 50 crores extra.
Understood, sir. Oh, and revenue to start from this financial year only, right, sir?
Yes, we are waiting for some regulatory approvals. It will start in this financial year for sure, but that is exactly the reason why whether, regulatory is not fully in our control. So it could start, if we might get 9 months of this year, we might get 6 months of this year. That's where it is, but both of these should contribute about 40 to 50 crores.
Understood, sir. And so, apart from these two, what are our long-term goals? How many products are we planning to launch in next 3-4 years?
So if you look at a product gestation period in this business is roughly 3 years if you have to do it all the way from scratch till launch. Okay. We had started some of them last year, which might see the light of the day by end of this year. But in the meanwhile, we have also initiated certain local partnerships for each countries where we can do like a low lift, where these are products which are already available in the market, and if we can figure out to do an exclusive tie-up and OEM and stuff like that, which we are working out. So from a long-term standpoint, just to let you know, we have at this point of time 5 to 6 products, including the 2 that are getting launched, which are already in pipeline in some form of the other, which is either in development stage, some in regulatory stage, some in testing stage, some in start of the production stage, and so on and so forth.
Understood, sir. First, so just want to understand, when we launch a product, so like first it is launched in the domestic market, then it goes to the ROW market, then US, or how we launch it simultaneously in all the markets?
So products that would come out of because what we manufacture right now, everything is manufactured and developed out of the United States office. So when we launch there first, and then from there, whatever time it takes for us to get the regulatory approvals in each of the countries that we will be going is the time taken to launch in those countries. But in the meanwhile, like I said, there could be some local partnerships that we would explore for each country, which could give us like a technology push or any of those things. Those products, it will be region specific or country specific and not necessarily global.
Understood, sir. Understood. So thank you so much. That was from implant business. One question on Sanar business. So Sanar, as we are we have seen approximately around 20% of occupancy in last financial year, and we are heavily dependent on international business going ahead, right? So what kind of international patients do we witness in Sanar? Is it from Asia, Africa, or how it is?
I'll take that. Yeah. So thank you for your question. So basically, in Sanar, we get almost about 60% business from international, and they are divided into 3-4 regions. One region is Middle East, from where we get almost 50% patients. Then we get patients from Africa and also from CIS countries like Uzbekistan and Turkmenistan and Kazakhstan, etc. Also, we get patients from SAARC countries like Nepal, Bangladesh, and Afghanistan, etc. Out of which Afghanistan is not working right now, but Nepal and Bangladesh we get regular patients. And other than that, we also get patients from Fiji Island, some patients from Indonesia, some more patients from Pacific Islands, and small patients from other countries. But majorly are these 4 buckets or these 4 regions from where we get the patients.
So any pressure are we seeing from Bangladesh issues?
So Bangladesh per se, if you see, has not been that volume in North India as compared to what it was in the East India. So maximum patient used to go to the eastern part, but North has not been that great volume. Our major volume comes from Africa and Middle East and also CIS. So these are growing steadily. And Bangladesh now, of last 1 month, I think the visas have started coming. So it takes about 1.5 months to 2 months to get the visa, medical visa there. But now patients are trickling in. So whatever volume we do, the patients are trickling in now from Bangladesh also.
Understood, sir. Understood. Yeah. Just last one on consolidated revenue. You said our consolidated revenue for FY26 will be better than FY25. So just to quantify it, maybe in the somewhere around single-digit kind of growth, high single-digit kind of growth?
Can you just repeat your question? I just lost.
Yeah. So I just asked about the statement which we made about our FY26 consolidated revenue to witness a better growth as compared to FY25. Just not to quantifying it, just wanted a broad range. We can see in a higher single-digit kind of a growth in FY26?
So we have already mentioned, we cannot quantify, but segment to segment, we have already given the indication that the hospital will continue to grow into the double-digit kind of thing. The similar kind of things we are seeing into the implant business also. And being a lower base, it will be the higher double-digit kind of growth. And because this year also we have grown by around 50% on the 12-month basis, on the consolidated basis in implant. So we are going to see the good growth into the implant, and hospital will deliver the double-digit growth.
Understood, sir. Thank you so much, sir. I have one or two more questions. I'll just come back to you.
Thank you. Participants who wish to ask question may press star and 1. The next question is from the line of Ranudeep S. from MAS Capital. Please go ahead.
Hey, thank you for the opportunity. Just wanted to check any update on the Nashik and Mumbai hospital. I think it's been more than 5 years that we've been waiting for this, an update in terms of opening up. Any thoughts around that?
Yeah, so for the Mumbai project, we have, the trust had gone to the charity commissioner, and basically, they wanted to kind of essentially get a correction on, the approval, and essentially they have received the approval. Now, we are broadly okay, and, it is as per our contract. Now, we are waiting for the trustees to kind of send us the final agreements, etc. So, we are waiting for them to share the details with us. And, after that, we will be filing and doing the registration for the O&M agreement that we have signed. So, we are okay and good to go from the charity commissioner and the regulatory perspective. Just some internal work has to be done by the trust so that they can share the documents with us, which need to be further registered. So that is the update, after which, we'll be proceeding to get the plans approved by the BMC and, the other formalities which will have to be completed.
It's been a while, right, that we've been tracking, and we've been waiting to hear an update. And parallelly, if you look at your peer group hospitals, I think they've been on an expansion spree. So are we at the risk of losing market share given this delay?
Well, I will not comment about others, but if I talk about our company, Shalby, I can tell you that we are expanding capacity into the businesses which are ROC accretive. Last 15 months has seen one large acquisition to the tune of almost 300 crores. So I would not say we are not in the expansion spree. We are also expanding. We are also adding a hospital in Mumbai. We'll be investing a little over 250 crores in that asset. So we are very much expanding, and also, just to kind of, I'm sure you know, since you are an investor here, we have the capability to double the revenue in the existing setup that we have. So we have plenty of growth avenues in the existing hospital business, and we are creating newer avenues. As Deepak said, in the newer businesses, which is in particular the implant business.
Sure. Look forward to hearing on the next step. Second question was on the Sanar, right? I think there was an optionality to increase from 130 to 180 beds. Just wanted to pick your brain in terms of what are the guidelines or any thoughts around this expansion?
Yeah, so we have done our homework in terms of what needs to be done, what will be the the regulatory approvals required, broadly what would be the cost required. Essentially, at this stage, where we are operating at an occupancy of about 25 to 30 beds on a regular basis, we already have significant capacity to grow in the existing setup. So we will be doing it in a timely manner based on which, we don't have too much capacity, which is unutilized. So maybe, at the right time, we will start the project. We believe that this project should not take us more than 6 to 9 months to complete the moment we start it.
Sure. My last question was on the franchisee business. I think when we created this model, I think we experimented with a couple of models in the franchisee space. Just wanting to understand now that it's been around 3 years since we've kind of launched the franchisee business. Would you like to share like a long-term guidelines? Because I do recall that there was a guideline of 50 plus franchisee. Are we still holding on to those numbers? If you can just share maybe a 3-year plan in the franchisee space.
Yeah, sure. So, see, the franchisee business has been growing. You might have seen the numbers. Of course, the base is small. We have been growing. But over the last 3 years, what we've realized is, we have become very picky in terms of, who we join hands with. Because ultimately, we have seen in a couple of hospitals and couple of partnerships where, the right standards and the practices and the protocols were not being followed. And essentially, that is detrimental to the brand of Shalby. And so henceforth, we have been very picky and, we will remain that way. We may not achieve the target of, what we've kind of mentioned earlier. But whatever we do, we'll end up, working with the right people. And as such, the good part is that there is no significant capital employed in this business from Shalby's perspective. All it takes is a little bit more of management bandwidth here. So that's what I would like to say about the franchisee business.
Sure. If I can just squeeze in one last question. This was on the home care business. Somewhere it looks like in FY25 the numbers seems to have stagnated. I think there was just a 1% year-on-year growth in terms of the number of patients served. This in the backdrop that we kind of cater to the senior citizens group a lot. I mean, are we thinking? Is there any special impetus that we're looking at in this business? Because this has an optionality of becoming a big business. Given by 2030 there are clear projections that India is going to have 300 million senior citizens. So, any thoughts around that, Shannon?
Yeah, of course. I think the opportunity set is huge, and we would like to capitalize on it. However, we have taken it up in 2 stages. The first stage is to really capitalize on the incoming patients and our existing patients at Shalby. And you see a lower growth because the growth at the standalone hospitals has been flat in this year. So from that perspective, we've not seen that kind of growth. But yes, we do understand what kind of underlying opportunity is there for the home care business because of the growing population, the middle-aged population, and the aging population. And in the next phase, we will be looking to capitalize on that and also invest in technologies, which can enable us to grow faster.
Sure. All the best for the next financial year. Thank you.
Thank you. The next follow-up question is from the line of R. Vidya Shankar, an individual investor. Please go ahead.
Thank you, gentlemen, for giving me one more opportunity. One thought that I had in my mind and wanted to understand, is there a competitive landscape that is prepared for the small cap and super specialty? With that category, who are our competitors in this micro category, and what is our strategy from a competition perspective for the next 5 years, product-wise and synergy-wise?
Sorry, so which business are you referring to?
Sir, Shalby Hospital Super Specialty is the core sector, right?
Yeah.
And we are in small cap. As of now, we are in a small cap sector from a market capitalization. If we focus on this micro combination, small cap, which is our market capitalization as on date, we look to become a large cap one day, and we look at super specialty. So if we combine these two, can we have a competitive analysis for the next 5 years? What will be the competitive strategy basis this micro competition environment?
See, I think, the strategy is very clear that there are orthopedics is, key for us because, we are not only leaders in India, but global leaders in terms of the market share, right? So we control over 15% of the organized market share in India. And that market is growing fast at higher double digits, and so are we. So we would like to maintain that leadership position which we have for the last 25 years. Over and above that, we have identified fast-growing segments, which are basically a major disease burden for the country right now, which are in the lines of cardiology, oncology, gastroenterology, neurology, nephrology. And these 5 segments continue to contribute more than 50 to 60% of the group's revenue. And these are again fast-growing segments. So this, along with orthopedics, will remain the fast-growing segments for us, and we will be focusing on this to grow faster in the coming time. And this will be coupled with, the high-end transplants that we do, like kidney transplants, liver transplants, bone marrow transplants, etc. So that will remain the focus because we believe that this is the strategy for us, which will help us grow faster. We feel that the competition is quite limited in terms of these segments.
So you are saying all these are high growth segments and primarily we are the market leaders in each of them.
We are the market leaders in all these segments, but these segments offer a significant pathway to growth going forward. So we will continue to grow significantly because of being in these segments. Of course, for orthopedics, we are the global leaders, as I mentioned earlier. But for some of these other segments, I would say that we are among the top 2 or 3 in the towns and cities that we work in.
So strategically, we are in the right pocket is what we are trying to say. And it is a capital intensive sector, which is the very nature of it. Because of it, some projects take a longer time in terms of gestation.
That's right.
Okay. Point taken.
Thank you. The last question is from the line of Kashish from Elara Capital. Please go ahead.
Hi, sir. Thank you. So just one question. This is regarding coming back to our implant business. So can you just give a broad idea how is the EBITDA contribution from region-wise? So how is the realization in the implant business if you are selling the same product in US? Is it higher as compared to what we are selling the same product in ROW in India market, or how it is?
I'll give you an idea on the margins and top line. So obviously, there are markets globally. If you look at it, it's a $30 billion market globally, divided into primarily 3 categories. There are high margin countries, there are medium margin countries, and low margin countries. Right now, where we operate actively on a month-on-month basis with different types of business, US and Japan for us right now fall in the high margin countries, and Indonesia falls in the medium margin countries, and India falls in the low margin countries. And just to give you a little bit idea of what is the price difference, it's about 4.5 times the difference between what we sell in the United States vis-a-vis what we sell in India.
Understood, sir. Also, just one last question or query. We have shifted our everything, every production of the implant business in US. So our OPEX cost might have definitely gone up, right? So wasn't it economically feasible for us to make the products here and sell it in the market?
So there are 2 ways, and I will answer this. But first, to say that and this is what we believe, not without comparing with anybody. We believe that our quality of products and what we want to sell in the market the way we want to, we have not yet been able to see at this juncture that level of precision and quality engineering talent available in this country, okay, right now, for the products that we have, okay. Having said the same thing, right now within the United States that we are doing over the last 12 to 18 months, there has been a significant amount of improvement that we've done in efficiencies in terms of, and you will see that even more significant in times to come in the next 12 to 14 months. In fact, you will start seeing month on month it's getting better. Even between April and May also it's better. So you will start seeing that it is getting month on month better than what it was the previous month. We will try and get to a great efficiency, but it is also at a stage where we have to build very solid quality, a great credibility, good brand and great precision to start with. And then eventually when we get a full hang of that technology and that talent available at some point of time for us to migrate and build it, we might look at it from a futuristic long-term standpoint, but at least right now we feel from a credibility, brand building, as well as being a product that we manufacture there, is the right strategy for the next at least 12 to 18, 24 months.
Understood, sir. Thank you so much. That's all from my end.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time, we'll take this as our last question. I now hand the conference over to the management for closing comments.
Everyone, thank you everyone for joining the call. We will connect again after the Q1 results. Thanks for participating. Thank you.
Thank you.
Thank you, everyone.
Thank you. On behalf of Elara Securities India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.